Global markets breathe a sigh of relief as U.S.-China trade tensions ease, but will it last? The world of finance held its breath over the weekend, but Monday brought a collective exhale as news of a potential trade truce between the U.S. and China sent stock futures soaring. Dow futures rallied a whopping 238 points, a 0.5% jump, while the S&P 500 and Nasdaq 100 futures climbed 0.8% and 1.3% respectively, with tech giant Nvidia leading the charge. This optimism stems from a crucial meeting scheduled for Thursday between President Trump and China's President Xi Jinping, where a much-needed trade deal is expected to be finalized. But here's where it gets interesting. This potential deal isn't just about avoiding tariffs. Treasury Secretary Scott Bessent hinted at a broader agreement that could include a delay in China's controversial rare earth export restrictions, a major sticking point in recent negotiations. This delay, coupled with the scrapping of Trump's threatened 100% tariffs on Chinese goods and a resumption of Chinese soybean purchases, paints a picture of a potentially significant de-escalation. And this is the part most people miss. The deal might even address the TikTok saga, with the U.S. potentially securing a favorable arrangement for the popular app's American operations. However, not everyone is celebrating. While chipmakers, who stand to gain the most from reduced tensions, saw their stocks rise, shares of U.S. rare earth miners took a hit. This highlights the complex web of interests at play and the potential for winners and losers in any trade agreement. The bigger question remains, is this truce sustainable? While the immediate market reaction is positive, the history of U.S.-China trade relations is fraught with volatility. Will this deal address the underlying issues or simply provide a temporary band-aid? Only time will tell. What do you think? Is this a genuine breakthrough or just a temporary ceasefire? Share your thoughts in the comments below. This optimism wasn't confined to U.S. markets. Global stocks rallied, with Europe's Stoxx 600 rising 0.3% and Asian markets experiencing even stronger gains. Japan's Nikkei 225 breached the 50,000 mark for the first time, closing up 2.46%, while South Korea's Kospi surged 2.57%. Adding to the positive sentiment, investors are anticipating a rate cut by the Federal Reserve on Wednesday, following cooler-than-expected inflation data. This, combined with the potential trade deal, could set the stage for a bullish week in the markets. However, a note of caution remains as big tech earnings reports loom, and a setback with Canada, where Trump imposed a 10% tariff on imports, serves as a reminder that trade tensions are never far from the surface. In other news, the pharmaceutical world saw a major acquisition as Novartis announced a $12 billion deal to acquire Avidity Biosciences, strengthening its position in RNA therapeutics. This move highlights the ongoing consolidation in the healthcare sector and the pursuit of innovative treatments. As the week unfolds, all eyes will be on the Trump-Xi meeting, the Fed's decision, and the earnings reports from tech giants like Alphabet, Amazon, Apple, Meta Platforms, and Microsoft. Will the optimism translate into sustained market gains, or will unforeseen developments throw a wrench in the works? Stay tuned as the global financial landscape continues to evolve.